Given the recent developments in the stablecoin industry, investors are asking me if I still like Visa stock and if I still recommend Visa stock because I've recommended Visa stock, I should say, as a buy for several years now. I own Visa stock in my own portfolio, and Visa was, I believe, the best dividend stock to buy. I rated in the beginning of last year. So I've been bullish on Visa and MasterCard for that matter. I own both in my portfolio. And so I wanted to touch on some of those investor concerns and update my recommendation for Visa and let you know if I still think this company is a buy right now.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So we had some interesting insights from Federal Reserve Governor Christopher Waller on Thursday, who said that stablecoins will bolster competition in the payment system, and that was a good thing. The rise of stablecoins will make many types of payments cheaper and faster, and that's the goal for me as a free market capitalist and economist, is that I want competition in the payment system to drive down the cost for households and consumers and businesses. So let's break down what that means or what that could mean for Visa and MasterCard for that matter. So when I look at this chart I pulled up here from 2015 to 2025, this looks at, in the blue, Visa's operating revenues, and in the orange, Visa's operating income. By the way, this chart I'm getting from fiscal.ai, an excellent service for aggregating data and pulling out really insightful charts like this. There's a link in the description if you're interested. So, two things to notice here with Visa. Number one is the excellent revenue growth from 15.9 billion in 2015 to 37.6 billion in 2025, more than doubling. Okay. The next thing to note is the improvement in operating income from 9.1 billion in 2015 up to 25.1 billion in 2025. So while revenue more than doubled, operating income almost tripled in that time. In fact, revenue increased by a compounded annual growth rate of 9.7%, and operating income increased at a compound annual growth rate of 11.6% in that time. If you divide the operating income by the revenue, you'll notice that Visa's operating profit margin is above 60%, the best of any company that I'm following, and I follow roughly 300 companies. Second place might be NVIDIA, and then third place might be MasterCard. Although NVIDIA, I wouldn't rank as highly as Visa and MasterCard on their operating profit margin because they haven't sustained it for as long of a period as Visa and MasterCard has. NVIDIA's operating margins have soared in the last 2 years. But looking at the business and seeing this operating profit margin of over 60%, and then going back to what the Federal Reserve member said, how it's going to potentially increase competition in the space, in the payment services space, as a result of increasing threats from stablecoins. So, one thing I'll note here is if Visa does need to lower prices that it charges merchants, it has plenty of room to do so. Okay, so it can fight back, and it has plenty of room to fight back and withstand the rise in competition. One thing I've really liked about this industry, and I own Visa and MasterCard, is that they haven't competed against each other on price, right? For merchants, I sell products online, I sell my book online and other products. And the fees that Visa or MasterCard charges is about 3% plus a small transaction fee of like 39 cents or 49 cents. But it facilitates a lot of transactions. If I were to say, you know what, I'm not going to accept the Visa on my website, I would miss out on so many sales. So I'm happy to pay Visa the 3% or 4% or 5% of sales uh, to facilitate these transactions. So I'm happy with Visa's ability to facilitate transactions, as well as MasterCard, as well as PayPal. I accept that on my website as well. So I'm happy with these services that help increase transactions. Now, if stablecoins jump in this space and offer to process transactions at a lower cost, I'm open to that as well. But it's not something that I'm excited about, or it's not something that I'm going to be quick to switch over to, because the potential improvement in savings is not that much for the time commitment to accept it as a payment method, and then to deal with all the changing circumstances as a result of accepting this new payment method that is yet unproven. Is it reliable or not? What are going to be the implications? How do they process returns? What about fraud investigations for chargebacks, etc.? All for what may be a 1 or 2 percentage point improvement in my cost of sales compared to Visa. So for me, it's not going to be a changer. But for companies much larger, let's say you're the size of a Walmart or an Amazon, and you can potentially reduce your transaction costs from what you're paying Visa and MasterCard to what you can process transactions from stablecoins, then it could be a big game changer, and it could reduce their costs and improve their profitability. But it's still very early days, and they're still likely to process a large percentage of their transactions with Visa. And if Visa or MasterCard, and Visa in particular here, since I'm talking about this company, were to see a large threat from stablecoins, they could slash their fees and be more competitive and reduce the need or the likelihood that large merchants switch over and accept something else as a payment method. So, because of their very large operating profit margin and their very large market share already, remember there's over 4 billion Visa cards in people's wallets and on people's digital payment systems. They've got a strong ability to fight back against this should it gain a momentum and should it gain steam. Early days, this is, of course, increasing the risk for Visa. To be sure, I acknowledge that. As a shareholder, I'm now acknowledging that the business is under greater risk because of the rise of stablecoins. Before that, there was virtually no competitor in this space for Visa in terms of a substitute type of product into the financial industry. But I was still aware of the fact that there could be some innovator coming and taking some market share. That was the risk with Visa to begin with, is that because it was already so dominant and it generates such lucrative profit margins. Whenever you have an industry and a business that's generating these kinds of margins, you're going to have a lot of investment in the space to try and take some market share, because other companies, other entrepreneurs see this profit margin and they're very attracted to it, and they want to come and take some market share away because they see these lucrative profits. All right. So all that being said, what do I think about Visa stock at its current valuation? The current market price, as I evaluate this business today on July 10th, is $355. The intrinsic value calculation, which I updated today, I calculated this business to be worth $418. So I still see a significant, in fact, the undervaluation expanded as I reviewed this business today. The biggest factor being that I lowered the company's weighted average cost of capital because the risk-free rate in the US has decreased since I last visited the company. And so I've lowered the company's risk-free rate, and as a result, its weighted average cost of capital decreased. And as a result of that, which is the denominator in my valuation model, as a result of the denominator decreasing, the valuation increased. Also, when I visit Fiscal AI to look at the forward price to earnings ratio, at a forward PE of 30, I think it's a fair valuation for the business. Overall, I would say Visa is now undervalued, whereas, 3 months ago, I was saying that Visa was fairly valued. So the business prospects have improved in recent months because of the lower cost of capital. The valuation has improved. So to answer the question, do I think Visa stock is a buy at current prices? I think so. I updated my recommendation here, recommending this stock as a buy on July 10th, 2025, while also acknowledging that the risks have increased. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.